Welcome, ladies and gentlemen. Welcome to the Bitcoin halving countdown. This is day 4. We started on day 5 today. There are 4 days left till the halving takes place with Bitcoin. Now, today I want to talk about Bitcoin's changing value proposition. How over time, Bitcoin in many ways switched from being peer-to-peer electronic cash, as Satoshi Nakamoto envisioned, a medium of exchange, to more of a digital gold or a store of value. Now, this has some very broad implications when it comes to the halving and how this will impact Bitcoin users, especially people that are investing in Bitcoin as a store of value or a hedge against inflation. Yesterday, we broke down exactly what Bitcoin is. We talked about the blockchain. We explored Bitcoin mining and specifically the block reward. That's how Bitcoin are created. They're rewarded to miners. Those are the folks that operate these computers. They're all competing, putting in work. This is called proof of work in order to solve a puzzle. Whichever miner or group of miners, again, those are just really powerful computers. Whichever miner or group of miners solves this puzzle first, they then take all the transactions that took place recently, compile them into a block, and add it to a blockchain. The Bitcoin blockchain is a collection of all the transactions that have taken place in Bitcoin's history. Each block gets added to the blockchain approximately every 10 minutes or so. Those blocks contain the transaction information, what address sent what amount of Bitcoin at what time to what other address. All right, so that's the blockchain. And essentially, the blockchain is the foundation of Bitcoin, a decentralized cryptocurrency that allows people to send and receive money, value over the internet without any third party or intermediary, without having to trust a third party. It's decentralized, so it's next to impossible to stop or shut down. There's tens of thousands of computers, and there's tens of thousands, if not hundreds of thousands, of active participants in the network in one way or another, myself included, buying and selling, sending Bitcoin. You, maybe if you have a wallet, you're part of the network as well. So it's a decentralized peer-to-peer network that really is changing the world, okay? So again, the block halving is coming up. The Bitcoin halving is coming up. Let's just take a quick look at when we can expect that to drop. Where's my little Bitcoin halving thing? Here we go. Bitcoin halving. And I'll share the link there in the notes as well. That's what I've been doing each one, the countdown. And like I said, here at Live Free Academy, we will be counting down when this is going to take place with a video each day this week. So as you can see, we have 3 days, 5 hours, and 40 minutes left till the halving takes place, where the number of Bitcoin being generated and rewarded to miners every approximately 10 minutes will go from 6.25 to 3.125. It's estimated to happen around April 19th at 3:56 p.m. Now, this number is changing the exact time because each block isn't exactly 10 minutes. It's approximately 10 minutes, and this is supposed to happen here pretty soon on the 840,000th block. Okay, so today, again, the point of today's special session is to share how Bitcoin's value proposition, its unique selling proposition, what makes it valuable, what gives it utility, it's changed over the years. And this has huge implications for the halving. Okay, so let's just break some things down. First, let's start here with the Bitcoin white paper. Okay, the Bitcoin white paper. This is the a white paper is like a piece of literature that describes usually some sort of digital or computer-based system. Okay, let me just make this full screen here. We'll go ahead and zoom in here. Okay. So check it out. This is the white paper that introduced the world to Bitcoin. And as you can see, it's titled Bitcoin, a Peer-to-Peer Electronic Cash System. Okay? It reads, a purely peer-to-peer version of electronic cash would allow online payments to be sent directly from one party to another without going through a financial institution. Okay? That's what Bitcoin was all about. Now, the white paper goes on to describe how Bitcoin works, what the unique innovation is of Bitcoin. Okay, and there's a lot to break down there. We're not going to get into all the intricacies. If you've done any work with me in the past, you know that I try to do my best to try to keep things simple. So I try to share enough information so that folks that are involved in Bitcoin understand, that have been involved will still get value. But I really try to focus in on making things as simple to understand as possible. So let me try to break this down, okay? As we just read, Bitcoin was presented to the world and originally a peer-to-peer electronic cash system. Peer-to-peer means that people are cooperating amongst one another. One peer here, me, hosting a Bitcoin mining little closet there down in San Marcos. Another peer over here hosting a Bitcoin node that has the whole blockchain. There's an exchange company here trading dollars for Bitcoin. There's wallet software. It's a peer-to-peer network of participants working together voluntarily. There's not one central party or an intermediary, as the white paper says. We don't have to trust an intermediary, a third party. Okay, so that's Bitcoin, a peer-to-peer electronic cash system. An electronic cash system means just like what it sounds like, being able to send cash or money over the internet. Okay, now, Satoshi Nakamoto's original intention was that this would be a system of commerce, to be able to send money back and forth with little to no fee. Large amounts of money, small amounts of money. In fact, back in the day, like I shared before, I've been promoting Bitcoin for over 10 years now. And back in the day, we would tell people, merchants especially, we were trying to get merchants to adopt Bitcoin. Stores, coffee shop, bookstore. I used to operate a bookstore. We accepted Bitcoin. And we would say, hey, you know, there's this new payment system. It's decentralized. There's no government or big company like PayPal. And it allows people to send and receive money almost instantly anywhere in the world for little to no fee. Now, this is going to be some important stuff here about how Bitcoin's kind of changed. And again, I'm going to relate this back to the halving that's coming up because it's really creating a perfect storm for a supply shock, which is what we're going to talk about in the next video. So we were talking to merchants who were paying 2 to 3% for their credit card processing. Meanwhile, they could be selling $20, $50, $200 goods and pay 5 cents, 2 cents. That's how it used to be back in the day, okay? There was little, the transaction fee was very, very low. Well, as time went on in the early 2010s, Bitcoin started growing in popularity. More companies started adopting Bitcoin. Even Microsoft was selling their technology for Bitcoin on their online store. Expedia as well was letting you book hotels and flights with Bitcoin. There's Steam, which was like this online video game platform. They were accepting Bitcoin. Overstock.com, Newegg, all sorts of large, big companies, big players. Not just John Bush's online store or his little brick and mortar conspiracy bookstore. As more and more people started to use Bitcoin, we reached what's known as a scaling problem, okay? Because there were so many people that were trying to do their transactions, send and receive Bitcoin to one another, that those transactions were filling up each block. Now again, this is a series of videos, so I'm going to be building on the previous videos, but if you recall from yesterday's video, I explained how the block currently has a 1 megabyte block limit. Now mind you, sometimes it's up to 2 megabytes. It's a little bit flexible, but it never goes above 4 megabytes, but usually it's just less than 2. And so you got a bunch of people that want to send transactions to one another. These transactions use data, digital information that's sent over a computer, right? The transaction data is like this address sent to this address, but it also has all sorts of other data as far as what Bitcoin you're using to compile the transaction to send to someone. For example, if someone sent you 10 tenths of a Bitcoin, there's 10 transactions that came into your wallet, each with 1/10, and you want to send 1 Bitcoin to someone. Your wallet actually has to compile all of those 10 tenths. They're known as unspent transaction outputs. I'm going to be sharing a lot more about this down the road, especially through my membership, because there's some things I'm concerned about that I need to get the word out to my audience about. So you would have to, the wallet would compile these 10 unspent transaction outputs, put it into 1 input of a whole Bitcoin, and then send it. Well, that transaction, all of that information is a lot of data, especially if you have a bunch of unspent transaction outputs. Okay, so we reached a challenge in the Bitcoin community that there are more people wanting to use Bitcoin at any given time, at any given approximately 10-minute period, than there were the transactions created so much data, there wasn't enough space in each block. So at this point, the transaction fees, which is like a bidding system, people want to send a transaction, they add a transaction fee, and it becomes this fee market where how bad do you want your transaction to be in the next block or the block after that or the block that comes 20, 30 minutes after that? Well, some people started bidding $2. Some people started bidding $5. At one point, the transaction fee got all the way up to $50. This really throws the whole concept of peer-to-peer electronic cash used for commerce that we were trying to push for global adoption. It kind of throws a wrench in the system. So quickly, two camps emerged. Okay, and again, I'm trying to share how Bitcoin's value proposition. What is Bitcoin? Why is Bitcoin valuable? Why do we use Bitcoin? What's the benefit of Bitcoin? It changed over time from being electronic cash, digital cash, a medium of exchange, to a store of value, digital gold, which is more about holding. Huge implications of this, okay? So all of a sudden, it was a challenge to send Bitcoin on chain, on the blockchain, right? And so the transaction fees got high. Two camps quickly emerged. How do we solve this problem? One camp simply said, well, just as Satoshi Nakamoto envisioned, we just increase the block size. So instead of a 1 megabyte limit, maybe it's 8 megabytes or 16 megabytes. Then we can store 2, 4, 8 times as many transactions on each block, allowing everyone to continue to use Bitcoin as its original purpose, peer-to-peer electronic cash. Another group, which was led by, in large part, a company named Blockstream that now pays many of the Bitcoin core developers, they said, no, if the block size is so big, then that would lead to such large files, like the blockchain would be so gigantic that it would become centralized and that your average user wouldn't be able to host a node. When you host a full node, you have the whole blockchain downloaded on your computer, okay? Let me see how big the blockchain is at present size. How big is Bitcoin blockchain at present? I think it's like 500, 600 gigabytes, something like that. Bitcoin blockchain size. Here we go. 565 gigabytes. Okay, so that's how big the blockchain is, all the data, all the transactions. So this other group said, no, we can't raise the block size because then only big server farms and big companies or corporations will be able to host the blockchain, because every 10 minutes we're adding 8 gigabytes, 16 gigabytes to the blockchain, maybe more over time. Instead, we should create these payment channels that run on top of the blockchain. So you got a block getting added every 10 minutes to the peer-to-peer blockchain. New block with new transactions. Instead, we should have people create these channels where they supply a little bit of Bitcoin and then they send transactions amongst themselves, changing the account balance. So Bob is like, I put up 1/10 of a Bitcoin and then I send 1/100th of a Bitcoin to Alice. So I put up 0.1 and I send 0.01 to Alice. Okay, so now I have 0.09 and Alice has 0.01, right? And then I send another 0.02 to Alice. So now I have 0.07 and she has 0.03. These transactions take place on a layer 2. That's what it's called. Layer 1 is the blockchain. Layer 2 currently is the Lightning Network. There's others, but this is the most popular. It's called the Lightning Network. It was developed by a company named Blockstream that's very influential in the Bitcoin space. And so you supply some Bitcoin. Now you're using Lightning Network Bitcoin. You send it amongst yourselves. There's other channels created that you can send through to reach your recipient. And then only every so often when these channels get closed does it settle on the blockchain, okay? And again, I'm trying my absolute best to explain this in the easiest way possible. I'm not recording every one of these videos live. We will do some live sessions later on in the week on Thursday, likely Friday as well. So you'll be able to ask any questions. Usually when I'm doing a live stream, I can say, like, are you guys following me? I'm trying to make it as simple as possible, okay? You don't have to understand all the intricacies, but here's why it matters. I always focus on what does it mean to me. The camp that said we shouldn't scale the block size and scale the actual blockchain so more people can do peer-to-peer electronic cash payments for a low fee, they ended up winning out. Now, there was some censorship, there was some ruckus that was made, a lot of controversy. This controversy since reignited, which I think is a healthy thing. But either way, this camp won out, which is why there's still a 1 megabyte block size limit coded into the Bitcoin protocol. This means that there's not a whole lot of transactions that could be sent on the blockchain. As this was happening, and fast forward into the future with folks like Saifedean Ammous, who wrote a book called The Bitcoin Standard, people like Michael Saylor, who's very influential in the Bitcoin space, the narrative is starting to shift. It has shifted to where Bitcoin isn't an electronic cash system. Bitcoin isn't a medium of exchange. It's a digital gold, which means we mostly buy Bitcoin and we hold Bitcoin. We hold on for dear life because chances are Bitcoin's going to go up in the future, so we want to hold it. Okay, so I just share all that bit of Bitcoin history that many people aren't familiar with that are just now coming into the space to illustrate the point that Bitcoin's value proposition is shifted from a medium of exchange to a store of value. Now let me just break down some analysis. What does this mean for freedom people? What does this mean for people that want to build wealth or protect wealth with Bitcoin? Well, on the one hand, as somebody that's deeply concerned about central bank digital currencies, I believe that the most revolutionary application of these new cryptocurrencies, the most subversive thing, the most freedom-oriented thing is a medium of exchange, because there will come a day in the future where central bank digital currencies are implemented almost entirely across the globe, and people are going to be kicked out of their ability to buy and sell goods and services unless they've complied with certain measures. Maybe it's up to date on the shots. Maybe it's not exceeding a certain amount of carbon output per your weekly household carbon allowance. This is all stuff the World Economic Forum and other institutions are actively talking about and working on. Of course, we saw in Canada, the truckers and people that donated to the Freedom Trucker Convoy in Canada when they're pushing back on Trudeau's policies. They had their bank accounts shut down, right? It's a very real prospect. Well, you can't shut down peer-to-peer electronic cash, non-custodial wallets where people have total control over their money. Now, if you recall during the COVID stuff, there actually were bank accounts, there were crypto accounts that were shut down, but those were custodial crypto accounts where people had their crypto stored on an exchange wallet, for example, as opposed to an Exodus non-custodial wallet, which is what I teach people to use, where you have control over your crypto. There's no company that has control. Okay, so I think there's extreme value in this medium of exchange. Bitcoin isn't that so much anymore. In fact, I was at church recently, and I noticed whenever they went around for the tithing, they pulled up this screen. It was a really flashy church in Austin that had this awesome jam band. I was there with my grandma, my parents, my kids. It was a very powerful experience for me. I don't go to church very often, but I feel drawn to now. And as soon as I saw, like, wow, you can donate with crypto, I went to check it out, pulled up the screen, went to their little deposit page, and tried to donate $10 worth of Bitcoin. The fee was $4. So I was like, well, maybe I can use Bitcoin Cash, which is an alternative to Bitcoin. It forked away from Bitcoin, and the fee was less than a penny. So for those of you that are concerned about CBDCs like I am and know if we have our Bitcoin stored with some custodial account, that could lead to problems. We could still get shut out. Worry not. There still are medium of exchange cryptocurrencies that work very well. One of them is Bitcoin Cash. It actually was the same as Bitcoin for a while, and then they forked away from the Bitcoin blockchain. And essentially, the transaction fees are very, very minimal, not even noticeable, and the block sizes are much bigger. And then, of course, there's Monero, which is a peer-to-peer electronic cash system that's completely private. You can't see any information on the blockchain, okay? So that's medium of exchange use case. That's how Bitcoin started off. But Bitcoin kind of shifted, but worry not. We still have Bitcoin Cash and Monero to use to send and receive money. And if you're ever in the Live Free Academy world, we teach about these currencies, especially Monero, because it's private. When it comes to Bitcoin, BTC is the ticker symbol, Bitcoin. It's more of a store of value now because it doesn't function very well as a medium of exchange. And this Lightning Network, which many Bitcoin maximalists, people that think Bitcoin's the only way to go and all the other cryptocurrencies are what they call coins, just total garbage, we should ignore them and avoid them, and they're only taking away from Bitcoin's majesty. The Lightning Network, there's some flaws with it. I'm not a big fan. Most of the use of Lightning Network is through custodial accounts like Strike and other services that could be shut down if we're subversive, if we're shut out of the economy. In fact, some of them no longer do business in the U.S., some of these Lightning Network wallets, because they don't want to have trouble with regulation. So regardless, here's where we are today. Bitcoin, BTC, has shaped up to be, because of some changes to the code in the past and because of a shifting narrative, it's now digital gold. It's more of a store of value. So what does this mean to us? Well, there's a lot of people on Twitter and online that are very negative and complaining and screw Bitcoin. I just saw someone recently say Bitcoin's a failed project because it's not what Satoshi envisioned, right? Now, admittedly, I'm frustrated that Bitcoin is no longer effective as peer-to-peer electronic cash, non-custodial. But I'm like, okay, well, what are we going to do? I'm somebody that accepts where we are and figures out how I can navigate around it. What am I going to do about this? Okay, so again, the implication, Bitcoin digital gold, scarce. There will only ever be 21 million like we shared yesterday. So what does this mean? Well, what this means now that Bitcoin is digital gold, and it's no longer so subversive as electronic cash that aims to compete with the dollar and replace the dollar and be the currency that we use all across the world, and we're no longer using fiat currencies. That's more of a threatening kind of thing to central banks. Well, now Bitcoin as digital gold is being heralded and being adopted by some of the largest financial institutions on the planet. And what this means is that myself, my freedom friends, people that I know, people in the Live Free Academy community, we see what's going on. They're inflating the currencies, the dollar, the yuan, the yen, the euro, the Canadian dollar. They're inflating these currencies, and we see value in having a digitally scarce, finite digital currency, a digital gold. There's still value in that, okay? We've seen value in it for quite some time. I also see value in peer-to-peer electronic cash. But you know who else is starting to see value in it? Big corporations and large financial institutions. Okay, so let's just take a look at this website here, Bitcoin Treasuries. I like to check in on this website here from time to time because it really shows how things are shaping up with Bitcoin and how much of a demand there is for Bitcoin, okay? So here we have bitcointreasuries.net. And as you can see, this is a list of companies that are holding Bitcoin. Not just companies, but also foreign governments and ETFs, exchange-traded funds. So you can see MicroStrategy, that's Michael Saylor's company. They own 214,246 Bitcoin with an estimated value of $24 billion. Wow. There's other companies like Marathon Digital, Tesla Incorporated has $500 million worth of Bitcoin, okay? So as you can see, there's a lot of companies here that are holding a lot of Bitcoin. And the point is, now that Bitcoin is largely seen as a digital gold, there's big companies, big corporations, foreign governments that are aiming to hold Bitcoin as a hedge against inflation and monetary manipulation. On top of these companies, there's also these funds. All right, now, of course, I'm sure you've heard about this. BlackRock, that's the iShares Bitcoin Trust. Fidelity, VanEck, Valkyrie, other major financial institutions are starting to buy up Bitcoin. And as you can see, iShares, that's BlackRock, they now own 270,976 Bitcoin. An ETF is an exchange-traded fund. It's basically like a paper version of Bitcoin that can be traded in retirement accounts. It can be invested with your IRA, for example. Pension funds will be purchasing Bitcoin and already are. On top of that, we now have private companies and governments. The United States owns a whole lot of Bitcoin, mostly seized from criminal activities. China has a whole lot of Bitcoin, 190,000. El Salvador especially is embracing and adopting Bitcoin with 5,702 Bitcoins. It's a smaller country, of course, but they're actually using Bitcoin as legal tender. Okay? Now, I wanted to share all this. This is something I'm diving deeper into, this changing value proposition of Bitcoin from medium of exchange, peer-to-peer electronic cash, to digital gold, store of value. The reason why this plays in big time with the halving, this is what we're going to talk about tomorrow. We're going to talk about the concept of supply shock. So simultaneously at the same time, we have large financial institutions such as BlackRock. We have governments that are buying more Bitcoin. We have pension funds that will soon be buying Bitcoin. And it's my estimation that in the not so distant future, banks and maybe even central banks will begin buying Bitcoin and holding it as a reserve currency, just as they did with gold in the past. You see, gold is an analog sound money, scarce, finite, not manipulatable, divisible, right? Has great qualities of money, except it's hard to transfer over space. Stores value over time, but it's hard to transfer over space. It's hard for one central bank to send gold or expatriate gold, a country that has a bank on deposit with the foreign central bank. You got to send ships. You got to have massive security risks to transfer billions of dollars worth of gold to another space, another place. Bitcoin is like digital sound money. It has very many similar properties to gold in that it's finite. It's hard to produce. It takes work to produce. It takes Bitcoin mining. Gold takes mining. But the big key difference is that Bitcoin can be sent over space very, very easily. And if you're sending a large sum of money, in spite of those transaction fees we talked about that are a big deal, if you're trying to send $10 for the church donation or $300 for a winner of a webinar prize we did recently, and it cost $25. I waited a day. It was less, but it was going to cost $25 to send the $300. It still costs a very small amount if you're sending a large amount of Bitcoin. And so the implication here, ladies and gentlemen, is at the same time that large financial institutions and Wall Street and big firms are looking at Bitcoin and buying Bitcoin to fulfill these ETFs that are being sold, at the same time this is happening, the number of new Bitcoin that are created with every block is about to get cut in half. So we're at a point where we have massive, massive demand, and the supply of available Bitcoin to sell is slowly diminishing. Back to our changing value proposition, more Bitcoiners now see Bitcoin as a digital gold. They're not spending it. They're rarely selling it. They're holding it. So the available supply on exchanges for companies and people to buy is dwindling and getting lower and lower. It's at historical lows. And at the same time, the new Bitcoin that are going to be created with the mining reward, and now that the halving's taking place, the new Bitcoin is going to get cut in half. This is going to lead to what's known as a supply shock. High demand, low supply. If you understand supply and demand economics, you know that when something is in high demand and there's a low supply of it, the price tends to go up. And that, ladies and gentlemen, is what we can expect to see. Who knows what's going to happen on the short term, but if it's anything like previous halvings that have taken place in the past, we can expect the price to increase substantially. Past performance is a good indicator of future performance, but it's not a guarantee. And so I just wanted to share this with you today. I also want to let you know we're going to be opening our membership again. Things are changing in this space rapidly, and this is something I'm extremely passionate about. Some would say obsessed. I believe that I have a very rational and conservative approach to this that is rooted in the principle of liberty. So if you're somebody that wants to protect and grow your wealth, if you're somebody that's concerned about the financial surveillance systems that are being erected around us, I want to encourage you to join us at Live Free Academy. You can sign up for our free daily email newsletter at livefree.academy/email. Then you'll get alerts of when we're doing the next video. This is day 4 in our 5-day countdown. Tomorrow we'll do day 3, and we'll dive into the supply shock that's happening right now that's only going to increase and what that means for you and your journey in Bitcoin. And then shortly after, in another day or two, we're going to be launching the Live Free Academy membership, new and improved. We'll be inviting you to join us, and we'll also be making a special offer as well. So you can stick with us, so you can make sure that you're always on top of the latest changes and you're always making smart moves that help to create greater freedom and prosperity in your lives. Okay, thank you so much for joining us today, ladies and gentlemen. Again, this is John Bush with Live Free Academy. Peace and freedom. Thank you.